we're back with another one. Don't mind the sore throat. I'm gonna go over how I low key did overtrade today and how we still managed to make nothing. Well, break even at least. So, initially coming into the day, you really want to listen to this because it happens to everyone, and you knowing how I react to these will help you avoid the mistakes that you could possibly make and stay composed within situations like this. So coming into the day, uh, quite simply, I'm looking at gold, knowing that daily structure is currently bullish, right? We have bullish daily structure, right? And the 4 hour is doing the exact same thing, bullish structure still. So yes, I'm expecting a retrace into here, and I marked it out about around 7 a.m., but I didn't get it at market open. So what happens is a little bit different. Market opens at 8 a.m., we get a few red candles here, and then we get an expansion upwards. So at this point, I'm just looking for executions because the hourly is bullish, like I just showed you. The 4 hour is bullish, the daily is bullish, and the 15-minute is about no man's land because we have no significant breaks of structure here and just a bunch of wicks, really. So I pretty much say that whenever you see that, consider it neutral and start to look for entries on the lower time frames, considering the 5 minute as your main point execution point, right? And we also had news coming out today. I mean, honestly, I shouldn't have even traded today, considering that it was CPI. But we got a break of structure from news here. So we waited for news to come out and we got a break of structure, right? And from here, really, it's quite simple. You look for the order block mitigation. So you scale down a little bit. And this is what the order block mitigation looked like right here, because this was the last down move before the expansionary move to the upside. So from there, just look for a break of structure to confirm your entire thesis. You could have just executed on top of it, but considering that it was a news day, had to be a little bit safer. So we pretty much saw this, and the execution was on the retrace back down, well, somewhere within here, really. I don't know the exact point. So the thing about this trade is, though, I pretty much didn't manage to send it to the Discord, really, because I hadn't decided whether or not I'd be sending this out today, considering that it's CPI day and I don't trade on CPI days normally. So pretty much didn't send it out. But when I saw this extension up, I gained lots of confidence in the move, i.e. making me more confident to send it to the Discord. So I just waited for this fair value gap mitigation, and on this reaction, I pretty much sent it to the Discord. So I was already in for this, and I sent this, and I also entered here because, well, I would be lying if I said that I said buy here and I didn't even buy here. So essentially, I got stopped out on this play, and this one right here pretty much gave me about like a 0.7 R-ish take profit, and everything else got stopped out too. And the Discord was pretty much down 2R because I did mention that I took this trade, and they probably entered here too. But after that, I decided to wait for market open, right? And there was the higher time frame zone that we highlighted earlier on the 4 hour time frame. And on the mitigation of this zone right here, I decided to make a play because this was already an hourly fair value gap and a 4 hour fair value gap. And there was like a demand zone right here because this was the previous down move before this continuation upwards. So I pretty much scaled down, and I saw that the 15-minute was bearish, but when I executed, it was still bullish because the candle hadn't closed, and I was anticipating for the candle to not close bearish. So we pretty much executed on the entry into that zone, and we saw this, and we pretty much took a take profit at 2R because I was telling them that it's better that we shouldn't have even traded today to begin with, but I'd rather leave on a good note, meaning a 2R close, and pretty much cover all the risk that they took for the day. And if not, they could pretty much just secure the risk for this trade, at least so that they don't lose further, and they could pretty much hold to our real take profit, which was around here. With that being said, this is pretty much the summary of the trade, and the reason why we did take profit here is just because this was the beginning of the last up move before this down move right here. So sometimes people think that this is going to be the price goes, but most of the time it's not going back in the direction. It'll just go to the other low. So really look out for this low instead of that one right here. That's actually a pro tip right there, considering it's happened to me many times where I've tried to at least secure a little bit on the retrace just in case I was wrong. and never got the chance because it would get really, really close. I mean, I'm talking what, less than $1 move from gold and never make it. So you want to execute on the start of the down move and you want to find where that is. So with that being said, I hope you guys found this educational and make sure to not trade on days like these because lots of stuff tends to happen and you really just want to get the market drift days where you just see that the market's going in one specific direction and you pretty much find execution points when the other side gets liquidated so that you can pretty much enter and get a nice impulse move into the overall direction. With that being said, I'll see you guys in the next one. Make sure to join the Discord and contact me. A few of you guys already have. It's been really nice talking to you guys and really nice helping you guys out. And yeah, best of luck in your journey. And I'm right here willing to help at all times.